What's up, guys? Can you all hear me? I am going to try this again. It's giving me some problems. Good old YouTube. We'll see. Just look at my beautiful face until I get this figured out. All right, so I'm going to sit here and wait for some people to show up. While you're waiting, I just wanted to say thanks for joining me tonight, and thanks for your patience. It's been a while since I've made a video or reached out to any of you in the YouTube community. For those of you who don't know who I am, my name is Brad Smith, and I lead the OTC chat group within TechBud Solutions on Discord. I specifically trade everything OTC related in within TechBud Solutions, and I help people who may not know anything about OTCs or what they're about, get them acquainted with it and get them to explore a different part of the market that maybe they're not fully aware of or don't know a lot about. So I'm going to go ahead and, as you can see, the title of the video today is, why OTCs are good for beginners. And so if you bear with me, I'm going to try to make sure I can get the chat part up because I want to see what you guys are saying. So just bear with me one sec. There we go. I think I got it up. Okay. So some people are already laughing at me. It's all right. You can laugh at me because I have no idea what I'm doing. It's all good. I'll get the hang of this eventually. I never said I was Ricky. So yeah, those of you who know me, within the Discord chat group that I trade OTCs, and so I just wanted to talk to you a little bit about why it is good for somebody who might be just starting out trading. And when you're first get into trading, what's the first thing you think of, right? Dow Jones, NASDAQ, S&P 500. Those are probably some big major markets that you're used to hearing, on the radio, on TV, whatever. But it's rarely talked about is this trading sector that is OTCs, and they're not traded on those platforms, not traded in those markets. They're traded over the counter, or what a lot of people call pink sheets. And so the reason that it might be good for somebody who's just starting out is because oftentimes these over-the-counter stocks are super cheap, right? So we play stocks that trade for 0.0001 cents per share or 0.0005 cents per share. I mean, that's a tiny microscopic amount per share that you could buy into. It'd be nothing for you to buy 1 million shares for $500. That's what that equates to. So if you buy something that's 0.0005 cents per share at $500, that's a million. That's 1 million shares. And what that does is that it allows there's so much volatility within the OTC market that it could easily, depending on the float and a lot of that other stuff, which you can go back into a lot of my other YouTube videos and I explain a lot of that. But it can easily go from 0.0005 cents per share to 0.001 cents per share. So we're talking 100% increase with very little effort based off the float and, of course, other factors. But that's the potential that's there. So if, say, for example, you've only got, I don't know, $3,000 to start out with, and that's a realistic number, in my opinion, to start out with trading. Anywhere from like $1,000 to $3,000 if you're just starting out. Doesn't take that much effort to save up for something like that. if you're really trying to get into it, it's not going to take that much effort. I'm sure you have something that you can sell, or get a second job, whatever, to save up and get yourself a little nest egg like that. So the other main importance within OTC stocks is to have a little bit of diversity. So I always like to suggest maybe having anywhere from 5 to 10 positions. It's not that hard to get 5 to 10 positions when things are trading for well under a penny. And so if you get into a triple zero stock, that's what we call a triple zero stock, for $500, and it rises 100%, you can get out, you doubled your money, and then get into something else. So that's kind of like one side of it. The other side of it is that the type of style trading that I like to promote within our group is what I like to call bottom feeding. And bottom feeding is something that you try to get into a particular stock when it's at its absolute bottom. So oftentimes that 0005 stock price could potentially be the bottom of that stock. And so you get into something like that, and then you can ride the run that we like, what we like to say is to ride up the run and then sell as it's rising. And that way you can minimize risk that way too. That's the way that we minimize risk. So we always like to tell people, that are familiar with Ricky's style of trading, that, he obviously likes to set stop losses and that sort of thing, which works well for him. But down in OTCs, because it's so volatile, it's almost impossible to set any kind of stop loss. And really, the market makers know that you're setting a stop loss, and sometimes that can get you in trouble. So the way that we minimize risk down in the OTC world is to try to get down at the very bottom of that stock and wait for that potential run. And so when we're looking for something like that, usually what happens is a stock might be getting diluted. There might be getting shares dumped into this stock by a particular market maker, whatever. They have notes that are outstanding, and so in order to make up for that, they have to dump shares into a particular stock. So oftentimes it causes it to drop down into that 000 price point. And so what we like to do is try to estimate or have a good idea as to when that particular stock may be finished with dilution. And that's often when it gets to the bottom of that price point. Once the dilution's over, oftentimes the float will thin out, and then it'll start to run back up, especially if there's some kind of catalyst or news that comes out. And so that is how you try to minimize risk when you're trading OTCs. And that's why I think it's good for somebody who's just starting out, because you don't have to spend a lot of money to make a decent amount of money. $500 and then you double your money or triple your money. We just played a stock 2 weeks ago. I think it was just a week before Christmas, that went up 400%. If you only put $500 in at 400%, you're talking, $2,500. So that's kind of, or $2,000 profit, but your total is $2,500. But anyway, that's kind of like why I think OTCs is a pretty good way to start out, especially if you're new to trading or if you don't have a whole lot to work with, because your 3 to 5% gains that Ricky does is definitely, a good way to go if you have a lot of capital to start out with, especially if you have over $25,000 and you're not worrying about, the PDT rule and stuff like that. Because when we're trying to find the bottom of these stocks, oftentimes they're going to end up being swing trades. And then that way you don't have to necessarily worry about that PDT rule, because you're not buying into something in the morning and then selling it later in the day. You're not doing that round trip in one day. You're going to more than likely sell it 1 day, 2 days, maybe even 2 or 3 weeks later. And that's just kind of how it rolls down here. So I hope that gave you a little bit more of an understanding, especially if you don't know what OTCs are, especially if they've kind of scared you a little bit, because I don't want anybody to, I kind of want to get away from that negative connotation that OTCs have. There is a lot of stuff that, goes on with OTCs, especially with like manipulation and that sort of thing. That is there. But what I'd like to think, especially within our group, is that we have really great group of guys and gals that can sniff out that kind of stuff, sniff out scams, and sniff out this doesn't make sense, this PR doesn't make sense, or press release doesn't make any sense, And so we have a really good tenured group of people within our Discord group. And if you've never been a part of Tech Buds, you've never been in our Discord group, I will put a link up in the description up here later once I upload the video, once we're done here live. And you can follow along in that video. It shows you how to get to our Facebook group, shows you how to get into Discord, and specifically within my chat group. So with that, I'm going to go ahead and open it up for questions. I know it's been a while since I put any videos up, and I do appreciate your patience with that. You know, I'm in school full time. I have my line of work, you know, causes me at the end of the year to like really work a lot, have a lot of overtime. But you know, now that the new year's over and we're into 2018, things are gonna, you know, I got some time freed up here, and so yeah. Anyway, I just appreciate you, you know, being patient with that. I'm looking forward to coming out with some great content and helping you guys, as Ricky would say, end the year on a green note. So let's go ahead and get to some questions here. All right. FVRD coming back big. Yeah, that's one we've been in for a while, FVRD. For those of you who aren't familiar with FVRD, that's something that we got in at the bottom. A lot of us got in, you know, at 0.0017 cents per share, maybe a little bit higher than that. But anyway, it went up to almost 3 cents at one point. If you guys got it out at the top, for those who played that was quite a huge win for us. I sold half of my position within that one, pretty close to the top. And then I left the other half in there because I think that we have other potential catalysts coming down the pipeline that could drive this stock even higher. And so that's why we continue talking about that, just because we see such huge potential with that. Got another question here. How successful have you been buying bottoms and waiting? It's pretty successful. You know, I will say that a lot of times it takes a good deal of patience. You know, it's pretty makes you a little anxious when you buy something. Let's say, for example, at 0.001 cents per share, and then it starts to go down, and you have 1 million shares. It starts to go down to 0009, 0008. For each one tick at 1 million shares, you're talking $100. You're starting to lose $100. So it can make you a little anxious, especially when you start to see it drop. But oftentimes, if you're patient enough, especially if you do the right due diligence and you follow along with us within the Discord chat group, and you have that overwhelming support that we have, you know, you wait it out for that run. You know, sometimes it doesn't work out. Sometimes you just have, you know what, I'm just going to cut my losses. But that's the thing, though, too. Like, you know, when it starts to drop to like 0009, 0008, and you only have 1 million shares, you're only going to lose $100 or $200. And, you know, it's really not that much, especially when you see the type of gains that we make. So like our successes outweigh our losses. And so that's why I also like to promote diversification within your portfolio. So, you know, say if you have $3,000 in capital and you take $500 positions, you know, you can have a pretty decent portfolio when you're just starting out. And so the idea is that because we're going to be more successful than we are when it comes to taking a loss, you know, that's going to far outweigh any kind of losses you might incur. So oftentimes you might only see maybe a 55 or 60% win rate, but the gains are going to far outweigh the losses, because more times than not, we're going to probably try to get out of that stock when you've only lost $100 or $200. Whereas, like, you know, when you see those giant gains, you're going to be making $500, $600, $700 on that 1 million share position. So that's kind of the logic with that. So let's see here. I got another question. Does Thinkorswim paper trade mode work for OTC stocks? I put a few orders in and never seem to fill. Maybe fractional pennies don't work well in the simulator. So I actually have my own brother who's on Thinkorswim, and he trades OTC stocks just fine. So I don't know if it's something that maybe you have like some kind of settings that you need to work through that I don't know, that aren't working right. Something you might want to even call TD Ameritrade about, see if maybe they can help guide you through that. But you should be able to do that. The only thing is that I know if you're paper trading through Thinkorswim, there is a 20-minute delay. So you don't have live or 20-minute delay with level twos and all that kind of stuff and price per share. So it's always your current price per share is always going to be about 20 minutes behind. And so that's the only hang up with Thinkorswim and paper trading when it comes to OTCs. And it's important for over-the-counter stocks in particular because we heavily rely on the level two. And if you're not familiar with level two, it's a type of indicator that we utilize when it comes to trading down here, so we can see the supports and all that. So next question, let's see here. Somebody asked about ASCK. So ASCK is another ticker that we are in that a lot of us are playing right now. That's one thing that I am currently sitting in. We'll see. There's some merger news that's potentially coming out on that. But as of right now, it's another one of those things where I'm playing at the bottom. It's trading at 000 and 0005, 0006. I actually got in that at like 0009 and 0010. So I'm currently sitting in the red, and I'm not worried about it because I strongly feel that based on the due diligence that I've done on it, that I see the potential. And I think with the right catalyst that should be coming soon, that I have nothing to be worried about. Another question is, I'm super confused on how the market makers are allowed to do what they do. Any advice on how to deal with them or take advantage? So, I mean, join the club. We all hate market makers. Unfortunately, basically what a market maker is that it's a bank. And the bank gets to be able to determine the price per share because of, the notes that they might have out on that particular stock. And, they get to capitalize on, I don't know if you want to call it misfortune, but basically the debt that particular stock has out. And so especially when it comes to dilution and that sort of thing, there's nothing that we can do about it particularly. But one thing that you may want to consider, so there's a particular market maker that you may be familiar with that we like to call as ASCM. And so that's Alpha Sierra Charlie Mike, ASCM. So what that particular market maker does is it's a shorting market maker. So we can't, the layperson can't really short OTC stocks, but those market makers can. And that particular one is a shorting market maker. So if you see a particular stock that might be having some huge run and all of a sudden you see that AACM show up, it's a pretty good indicator that you may want to consider getting out of something like that before the market closes, because there may be something that comes about. We've seen it plenty of times where that ASCM shows up and caveat emptor or CE gets slapped on a particular stock, and then it drives the price down, and and you're losing way before you can get out of it. So those are that's a quick example of how to maybe use that to your advantage as far as that market maker is concerned. There's another one, BNDM, that likes to dilute. That's a diluting market maker that basically dumps shares into a particular stock. And what dilution does is it makes a smaller piece of the pie for everybody who's invested in it. It's never really a great thing. So if you start to see that, especially when it's running, that could be another good indicator, to get you out. But those market makers can be overrun. The shorting can be overrun. It all depends on volume and that sort of thing. And again, that's one of those things that if you're in it within our Discord chat group and within my channel, we have a really supportive group of people. I really love the culture that we've created within our OTC chat group that can basically give you insight on, what it is as far as when it should be a good time to get out of a particular stock, when a specific market maker shows up in it, and especially when it's running. So I know that was a little bit long-winded, but I wanted to make sure that you had a good understanding with that. So thanks, Aaron. I appreciate it. So Richard, oh yeah, no problem, Richard. Somebody was asking me on YTEN. Thanks for that ticker. I'll go ahead and check it out. I'm not familiar with it, but I'm always open to suggestions when people are looking and doing their own due diligence. That's one thing that I really like. If you are coming to me with a particular stock, you're coming to the group with a particular stock, at least make sure that you've done some kind of due diligence on it. Why are you shouting this out? Why are you looking at it? Is there something that you see that we're not seeing? Is there a volume that's all of a sudden shown up on it? Is there, filings that have shown up that, you're curious about and you want to get some confirmation on it? I'm all about confirmation, but one thing that I like to see, promote within our group, and that's really what's made our group stronger, honestly, is that don't show up just expecting a free answer. Do some work and then we'll all discuss it together and then try and figure out, whether this might be a good play or not. And so I think that the culture that we've all created within the OTC chat group has reflected that, and it's made our group all the better for it. So backing up to Colin's question on share structure, as far as share structure goes, let's go see here. Is there a share structure question? Let's see here. Oh, what do you look for in share structure? So sorry, Colin, I missed that. But as far as what I look for in share structure, float is one of the big things that we look for, right? So a lot of people ask, give me some numbers on like where would you buy in on a stock that has, X amount of float. So I always like to say, if you're buying into a stock, you're looking at the share structure, make sure the float is somewhere between, I would say, 150 to 200 million shares to about a half a million, or not a, yeah. So 100 million shares to about a half a billion, to maybe at the most 700 billion. Every once in a while you have those exceptions. But the reason is because you want something that's low enough that's going to cause the stock to run with very little effort, right? So the lower the float, the more volatile the stock is. It can go one way or the other quickly without much effort. And so if something has a very high float, say like 2 or 3 billion float, it's going to take a ton of buying, a ton of activity for that to move even 1 or 2 ticks. And when I'm saying tick, I'm talking 0.0001 cents per share. I mean, that's a lot of work it's going to take for it to move just even that much. So I like to tell our group to stay away from stuff like that. Obviously, there's exceptions to the rules, and there can be money made in a high float stock, but it's going to be more difficult to do it that way. So I'm giving you a hard time. Sorry, man. But yeah, so I just wanted to kind of come back out with you guys. I know that it's been a little bit, but I'm looking forward to, getting back in the swing of things. You guys are going to get more content here. I'm going to try to at least put out at least 3 videos a week, if not more. And I'm looking forward to 2018. We've got a lot of exciting stuff going on. Crypto is really hitting the market, obviously, with with Vin and what he's got going on in crypto specifically. But there's also plenty of stocks within the OTC world that are taking advantage of crypto as well, which would allow us to take advantage of that. The other thing is marijuana stocks. Unfortunately, we had Jeff Sessions come out and say that they're probably looking to tighten regulations on weed stocks and really not promote that on the federal level, which is kind of a shame if you ask me. But that doesn't mean that more states are not legalizing weed and marijuana. Stocks are going to be coming on the rise, in my opinion. Canada is officially legal across the board. California just went legal across the board as of the 1st. So I think it's just going to be one of those things where there's going to be more and more states that are going to make it legal. And on the federal level, they're not going to have much of a choice. So just keep an eye out. There is a lot of weed stocks to sift through and work through. But again, that's one of those things where, networking within our group is going to be essential when it comes to finding those ones that are really going to take off. You got a lot of garbage out there, and sometimes, when it comes to over-the-counter stocks, it's just something you got to sift through. So anyways, guys, I appreciate you watching tonight. It was just something that I just kind of want to get my feet wet again. really appreciate the questions. If you guys like the live videos, I'll try to do more of those. If not, I'll go ahead and go back to, recording some good content, especially when it comes to more specific things that maybe you guys aren't aware of. I want to dig deep a little bit more down into share structure, what that means, and watching for this catalyst and that sort of things. So somebody said they just got here. Sorry, I feel like I've been on here forever. I guess this is how it goes sometimes when I feel like I'm just talking my head off. But anyway, guys, I appreciate you watching tonight. That's all I got for you guys tonight. And B Smith is out.